2008, people watched their retirement accounts lose half their value in months. In 1929, fortunes built over decades disappeared in weeks. In 1971, the entire global money system quietly changed overnight. Different decades, different crises, but the same question always appears. When the economy collapses, what actually survives? Not the headlines, not the hype, not the hot investment everyone was talking about 6 months earlier. History has a strange pattern. When financial systems crack, when currencies wobble, when markets panic, a small group of assets keeps showing up on the other side. Sometimes quietly, sometimes stronger than before. Gold, land, and even something as boring as government bonds. These aren't the assets people brag about at dinner parties, but when economic storms arrive, they tend to be the ones still standing, and history has tested them many times. Right now, the global economy is sitting on something unusual. Global debt has passed $300 trillion. Governments are printing money to manage that debt. Interest rates rise, then fall, then rise again. Banks fail, currencies weaken, and suddenly the idea of economic collapse doesn't sound like ancient history anymore. It sounds possible, but to understand what survives a collapse, we need to understand what usually fails. Because economic collapses rarely start with assets. They start with systems. Most modern wealth is not physical. It's numbers, digits on bank servers, stocks inside retirement accounts, currency inside financial networks. These systems work beautifully until confidence disappears. In 1929, the U.S. stock market fell nearly 90%. In 2008, trillions of dollars in housing wealth evaporated. In Argentina's 2001 crisis, bank accounts were literally frozen. People couldn't access their own money. In those moments, the problem isn't just falling prices, it's trust. When trust disappears, financial assets can collapse with shocking speed, which brings us to the first survivor. Gold has been money longer than most countries have existed. Empires rise, empires collapse. Gold quietly remains. During the Great Depression, banks failed across the United States. Thousands closed their doors permanently. People who held cash lost purchasing power. People who held stocks watched them implode. But gold? Its value surged as governments struggled to stabilize currencies. In the 1970s, something even stranger happened. For decades, the US dollar was backed by gold under the Bretton Woods system. Foreign governments could exchange dollars for gold, but by 1971, the math stopped working. The US had printed far more dollars than it had gold, so the government did something extraordinary. It simply ended the system. Overnight, the dollar was no longer tied to gold, and suddenly, gold became a free market asset. In 1971, gold traded around $35 per ounce. By 1980, it reached $850. That's a 24-fold increase in less than a decade. Not because gold changed, but because confidence in the monetary system did. Gold has one simple advantage during collapse. It doesn't rely on promises, no bank balance, no government guarantee, just a metal that humans have trusted for 5,000 years, which is why central banks themselves still hoard it. Quietly, the second survivor is less glamorous. Land, dirt, soil, physical space on Earth. Land survives economic collapse for a simple reason. People always need a place to live, and economies always rebuild somewhere. After World War II, entire cities across Europe were destroyed. Factories gone, currencies unstable, infrastructure flattened. But land in those cities eventually became some of the most valuable real estate on Earth. Because when recovery begins, development returns to the same physical ground. Even during the 2008 financial crisis, when housing markets crashed, something interesting happened. Bad mortgages collapsed. Over-leveraged properties lost value, but high-quality land in major cities recovered quickly. In many places, it surged. Because land isn't just property, it's location. You can build new buildings, you can rebuild infrastructure, but you cannot create new land in Manhattan, London, or Tokyo. Scarcity eventually wins. That's why some of the wealthiest families in history quietly accumulated land rather than stocks. They weren't chasing returns. They were buying permanence. The third survivor might be the most surprising. Government bonds, which sounds strange, because governments themselves often cause economic crises. Yet high-quality government debt has repeatedly survived financial chaos. During market crashes, investors do something predictable. They run towards safety. And historically, the safest borrower has been large, stable governments. During the 2008 financial crisis, while stock markets collapsed, investors flooded into U.S. Treasury bonds. Prices rose. Yields fell. Even in the middle of panic, the market still believed the U.S. government would repay its debt, which shows something important. Economic collapses aren't always about everything failing. Sometimes they're about re-ranking trust. Risky assets fall. Trusted assets absorb capital. But bonds come with a huge caveat. Not all governments are equal. Argentina has defaulted on its debt 9 times. Russia defaulted in 1998. Many countries have erased bondholders during crises. So bonds only survive collapse when the government behind them survives too. Trust still matters. At this point, the pattern becomes clear. Assets survive economic collapse when they share 3 traits. They are scarce, they are trusted, and they exist outside fragile financial structures. Gold is scarce and globally trusted. Land is physically limited. Strong government bonds rely on the power of stable states. Everything else, much more fragile. Tech stocks, speculative assets, even currencies. They depend heavily on confidence continuing forever, which history tells us it doesn't. But here's the uncomfortable part. Just because an asset survives collapse doesn't mean it protects everyone. Gold owners during crises often do well, but gold doesn't produce income. Land can survive economic chaos, but only if the owner can afford to hold it through downturns. And government bonds rely on something fragile: political stability. In other words, there is no perfect shield against economic collapse, only assets with better survival odds. And history shows us those odds clearly. Across depressions, currency failures, banking crises, and even wars, which raises a quiet question most people rarely ask. If history keeps proving which assets survive, why does each generation still rush into the ones that collapse first? Maybe the answer is simple. The survivors are boring. Gold doesn't promise 10 times returns next year. Land moves slowly. Bonds are, well, bonds. Meanwhile, speculative assets offer excitement, momentum, the illusion of easy wealth, until the cycle resets again. And when it does, history tends to repeat itself with uncomfortable precision. The same crashes, the same panic, and the same quiet survivors waiting on the other side, which leads to a final question. If the next economic shock arrives, will people finally learn from history, or will they discover again that the safest assets were the ones everyone ignored?